Hello and welcome. My name is Oscar from the Finance Society at Stockholm Business School. Today we're going to talk about the inside bar pattern in the technical analysis. This is one of my favorite patterns because you get a very low risk and very high reward, which is of course what you want to strive to find. This is the basic gist of the pattern. You have a big up move or down move, of course, but down move, of course. But we're going to start off by looking at a positive example. So we have a very big upsurge or an up move in one bar. Again, this bar can be 10 minutes, it could be a day, a month. It doesn't matter. It depends on what time frame you're going to trade. So you got one bar, big bar. This needs to be a very big bar. You want to think that whoever sold here in the bottom of this bar is going to be very frustrated that he didn't keep the stock an extra day, because this is a big move. Again, depends on the time frame, but say it's 5% on a day. That's a big move. So this is not a small move. This is a candle that stands out from the chart. So you have this big move. You have dropping, sideways, dropping, going sideways again, dropping down to the bottom of this candle. You don't have to hit the exact bottom, but you want in the lower area of this big candle. In this general area, you then buy in the same direction as the big candle. So if this is a green candle, you go long. And if you just flip it upside down and it's a red candle and it slowly creeps up again to the top of this candle, then you go short. And we're gonna look at a couple of examples. Here we have Volvo, and I'm looking at this big candle here. Whoops. Yeah, this candle here. This is a 30-minute chart, so each bar is 30 minutes. So the morning of the 19th of March, we started with a big up move, and over the day we went slowly back down to the bottom of this bar. So what you would do is at the bottom, at this red one at 15:30 or 3:30, you would go long. On the premises of your stop out is any close below the low of this candle. It's up to you if you want to use the wick or not. Depends on the wick. If it's a very long wick, then maybe the wick ain't the best stop out. But a close underneath either the open or the wick, and it's up to you. So in this case, your open, you would have an entry of 110. Your stop out would be, let's be generous, 99.75. Again, this is a stop out on a close, so worst case scenario, this would just keep on falling, then you would be screwed. But we will go over more about money management and stop out in 2 weeks time. So in this case, you have 35 AUDA as your risk, and your reward, your reward is infinite because you're going long. But your realistic reward should be at least the top of the candle, or the top of the candle plus the candle again. So this candle is 2 kroner long. So your reward should either be 2 kroner or just 4 kroner. So it's up to you. Or you can take like 50% of the position off at 2 and take the other at 4. Again, that's money management. We're going to go over that further on. But in this case, you buy here, you go to bed, new day, you start creeping up again, you reach your first target, maybe take half off, again down, again you don't close underneath this, you're not even really close to your entry, and we just continue searching up, and here at 104 in this candle you would sell the second part of this position, and it would be a successful trade. Of course, this is not a foolproof trade. Nothing is foolproof. But the great thing is that you have a very, very low risk. You don't risk a lot of money, but your reward is big in comparison to the risk you take. So that's why it's a very good setup. We're going to look at BMW on the German DAX. Here we have the big down move from 116.50 to 130.62. That's like €3 in 30 minutes. So that's a big move. Again, here we got a big move, but then we continue falling. So this would not be an inside bar. Maybe on a different time frame, but that's not what we're looking for right now. So this is the down move, and you go sideways, and you come up again, all the way here. This is not as good as the one in the Volvo example, where you just go big down up to the top. That's the ideal. But as long as you don't close, or confirm close, I should say, underneath this this bottom, it will still be valid. If you find, well, this would be a good area to trade as well, but that's just because it's a big bar. But this inside bar would still be valid. Again, you have never closed above the top, so you would just wait and see. And around this area here, of course, you're not going to short the top because it's not very likely. But in this area, you would go short. Your stop would be your, let's say you get in here on the close of this candle, so 1640, and yeah, you have like 20 cent stop. A 20 cent stop on, what was this, almost €3 drop. That's 1 in 10, and that's a very good risk reward. You risk 30 cents, your reward is €3. Again, is it €3 or is it €6? Because it all depends how you wanna put the trade. But 1 in 10 or 1 in 20 is a very good risk reward. And these are the trades you're gonna want to look for, because again, you risk very little money for a potential big reward. So even if the market goes against you, you only lose a little bit of money. When the market goes the way you think it will, you get more money. A bigger reward, I should say. And again, it's always packing the odds in your direction. And just as you see here, you have the 200 moving average. You haven't hit the 200 in a while, so it's probably gonna hold. So that's another indicator that we're not gonna close over this top. Again, this is a doji. We haven't looked at dojis, but that's another indicator that we're gonna continue down, or not take out this top, I should say. So there's different ways of looking at it, of course, but I just wanted to show you this. I would call it a continue pattern, maybe. And again, this is the inside bar, so big down move. I like the Volvo one better, so I'm going to show you that one again. We go up and we go slowly down to the bottom of the candle in this area. Doesn't have to be on the spot, but in this area you take the trade in the same direction as the big candle. So Volvo, we would go long. In BMW, we would go short. So here we go long. We stop out first half here, or we take profits here, or we take profits here. Very simple. Next time we're going to look at topping tails and bottoming tails, or rising stars and falling stars, I think they're called. I used the topping tail, bottoming tails. I'm not sure about the other terminology. That word. And after the week after that, we got to look into money management and just my way of looking at taking tips. And yeah, you're taking tips from me, so maybe you should watch out. But that would be a separate video, more about what I think, the traps I have fallen in during my trading, so you can avoid them. As always, have a good week and talk to you next week. Bye.